Welcome this evening. I'm delighted to be here on behalf of NatWest supporting this event and to give you an opportunity to hear from us just some of the stuff that we're doing to support our business community locally within London, but obviously across the UK in terms of the work that we're doing. So I've now got to work out how to use this. That's great. So one of the things that you'll have heard a lot about is the government's urging of the banks to support, they call the small and medium enterprise, I prefer to refer to them as the kind of business community, in gaining access to funding or to at least be able to have the confidence and belief to have a conversation with the bank should they have a need or an opportunity that they would like to debate. And I put on there, what does this mean? Because I think it sort of is a relatively long-winded way of saying that it's just incumbent upon us as the banks to be supporting the community, particularly given the sort of GDP linked to the small and medium enterprises. So I want to approach it from kind of two sides. The first side is that I could do it through statistics. So we're lending £80 million a day to UK SMEs, and we're approving 85% of applications that come in front of us for funding from that community. Provide 5,000 business loans a week. We've provided nearly half of all of the Enterprise Finance Guarantee Scheme loans that have been written since the scheme was launched. We've committed to some specific funds, Manufacturing Fund and the Franchise Fund. And finally, 9 out of 10 of SMEs who have renewed their overdraft have done that at the same or at a lower rate following the release of the NatWest Customer Charter. But for me, statistics are there to convince people that things are being done or things are happening. And I don't really want to convince you tonight, because it's not really my place to do that. What I'd like to do is just to give you some belief and confidence that if you have a need or you are a business that's looking to grow and your considerations are whether that's via some equity funding, whether there's some debt, more traditional funding required alongside that, just to really give you more belief and confidence rather than to give you a load of statistics to show that, you know, NatWest is open for business and is supporting the community. So as I've said, it's about belief, it's about confidence, and that for me really starts from what do our customers tell us they want? What do they require? What do they need? What do they want from us as a bank? And then an opportunity just to walk through some examples of work that we've done with emerging and developing businesses in the early part of this year, and where we've tried to link debt with an equity position to be able to give a balance of funding to businesses that are looking to grow or expand. And then obviously there's an opportunity for you to talk to us during the break, because we'll be outside. So what are our customers telling us? The thing and the feedback we get more than anything from our customers is they crave a relationship manager or a contact point within the bank who understands what they do and understands the market in which they operate. And I think those are two quite different things. It's understanding what a business does and having the knowledge to be able to give advice and solutions. But it's as important for us as bankers to understand the market in which those businesses operate, the opportunities, the challenges that face those sectors as they go through cycles. So one of the things that we've done in trying to react to that sort of craving from our customers is to give relationship managers an opportunity to build a depth of skill in sectors. And the 7 sectors that I put up there, which I won't go through in detail, are the sectors that cover 95% of the business community within London fall into one of those 7 sectors. And we've built those sectors so that relationship managers within those teams are exposed to their customers and to the market every single day, so they build a real depth of knowledge and understanding. So why specialist sectors? As I've said, for me, it's about the depth of understanding. I think knowing what a business does is part of the challenge for the bank. The important bit is understanding where they do it, who their competitors are, who the other key players within that sector are, and being able to kind of use our experience and the customer's experience to be able to build a better proposition. A greater understanding of the challenges and opportunities. You know, some sectors, as we go through economic cycles, find it more difficult than other sectors. Doesn't make them any less needing of our support, but it's key that we understand what cycle those sectors are in so that we can be a little bit more dynamic about the solutions that we provide. And then the final bit, which is probably, I guess, the key bit, is what are the funding solutions that we can provide, or even we need to define better or build in order to be able to support those communities. So as I said earlier, I've got a couple of slides with some examples of sort of support we've given businesses over the last 2 or 3 months that have really come out of us starting to build a much greater knowledge of what goes on within those sectors and what our customers within those sectors are telling us are the challenges they're facing, the opportunities they have for growth and expansion, and being able to kind of build the solutions that go alongside that. So within the telecom sector, we've just supported a business with an enterprise finance guarantee scheme, which we've committed to do alongside some additional equity coming into the business. And against the financial performance of that business, we've committed to support it with some debt alongside the equity that's been put in. On the franchise side, we've just supported a franchisee to purchase some new sites, but because they're not all available to them yet, we've been able to do the enterprise finance guarantee scheme and actually phase the drawdown of those loans as and when opportunities come around. We did some work with a data storage company where we looked to convert some loans into equity to give them an improved balance sheet position. And off the back of that, we were able to commit to £1 million of funding to help them to improve their data centre equipment through Lombard technology. An advertising company where, again, we've restructured the financial package, but again, alongside and conditional upon a commitment of some further equity coming into the business so that they can continue to expand and grow. In the technology space, this is one where we committed again to an enterprise finance guarantee scheme loan to be done alongside a further level of equity coming into the business. That equity has now been raised. They've just drawn down on their facility, and that's got an 18-month capital holiday at the start of it just to kind of help them with the cash as they go through their growth. We've supported a large recruitment business, again, through invoice finance, just trying to give them the maximum ability to leverage cash out of the debt that the debtors that they're producing. Within the retail business, we've just supported a customer in looking to now import from some new markets for them so that it helps them to improve their margin position. We have the knowledge of those markets from the global footprint that we have, and we've been able to tailor some funding solutions to help them to do that. And finally, in the media space, we had a business that was started with seed capital. We've now supported that again through the EFG scheme so that they can grow, so they can grow, and that we can help them to maximise value as they go into another round of VC, which they have now raised, and they're now looking to expand into some overseas markets. So just really wanted to give you some examples of the things that we're doing, which I think the challenge for us is that we often see the equity as being the thing that needs to be utilised first before we're able to put some debt alongside that. And I think we're just becoming better at understanding that they actually can work alongside each other, but against us understanding what the business is doing, what its expansion plans are, what its growth are, or growth aspirations are as it goes forward. So, believe or convinced, I guess ultimately I'll leave you to decide. The statistics are there, they are factual. We update those regularly. So, they are there, as I say, from my perspective, more to convince that actually actions are being taken and things are happening. For me, it's more around the belief and the confidence. If people believe and are confident that NatWest is open for business, that it has an appetite to support businesses, and it has, I guess, a real understanding and is starting to build a much better understanding of what customers do and the markets in which they operate, then we have a far better chance of being able to support those businesses with whatever their funding requirements are, and importantly, the most appropriate ones that sit alongside whatever their plans are, whether it be growth, whether it be into emerging markets, we can help and support them to do that.